How stable are stablecoins during a crypto crash? Stablecoins are supposed to have consistent value, but one popular one recently collapsed. Here's how it went down. Stablecoins are very important in the cryptocurrency market. These tokens, whose value is typically pegged to an underlying currency, are intended to facilitate the exchange of digital assets of value in the crypto economy and aid in the further adoption of crypto activities. Tether, USDT, USD Coin, USDC, and Binance USD are among the most popular stablecoins in terms of market capitalization, BUSD. There are numerous other stablecoins that play an important role in the market today. However, as history has shown, some stablecoins have limitations. On May 12, the cryptocurrency Terra, LUNA, which was one of the most valuable in the market, plummeted to near zero. Luna fell nearly 96% in a 24-hour period after the network's stablecoin, Terra USD, depegged from the US dollar and began a choppy descent on May 9, triggering a crypto bank run in which users aggressively sold off Luna. People put too much trust in it too soon, says Brock Pierce, chairman of the Bitcoin Foundation and a prominent cryptocurrency investor. The Terra USD experiment revealed network flaws and the need for decentralized stablecoin infrastructure improvements. Investors are understandably concerned about the future of stablecoins and their goal of enabling more efficient crypto transactions. Here, we look at the factors that may have contributed to the USD crash, as well as where the future of stablecoins may be headed. How do stablecoins function? The Terra USD, has crashed. The impact of the USD crash on the cryptocurrency market. The stablecoin future. How do stablecoins function? Stablecoins are digital currencies that are directly pegged to a more stable underlying asset, such as a national currency. Some of the most popular stablecoins are backed by the US dollar or a commodity. Stablecoins are used to help manage the volatility in the cryptocurrency market due to their intended price stability. Stablecoins are classified based on their underlying collateral structure, which can be fiat-backed, crypto-backed, commodity-backed, or algorithmic. Stablecoins enable market participants to easily enter and exit crypto trades, improving the usability of volatile cryptocurrencies and increasing liquidity in the crypto market. Stablecoins can be used by market participants when crypto price swings become difficult to manage due to their direct peg to a more stable asset. Crash of the Terra USD. Terra USD is an algorithmic stablecoin that is issued and supported by the Terra, LUNA, ecosystem. That is, rather than being backed by holdings of US dollars, USD maintains its peg to the US dollar through an algorithm that changes in response to supply and demand for another cryptocurrency. To keep Terra USD pegged to the dollar, this stablecoin used an algorithm that minted new or burned existing Luna. When Terra USD fell below $1, new Luna tokens were minted to buy the stablecoins. When Terra USD rose above $1, the stablecoins were sold and existing Luna tokens were burned. Walker Holmes, Metatope's vice president, explains. As the price of Terra USD fell, more Luna was minted to keep the peg. As more Luna were minted, the value of the asset backing the stablecoin rapidly approached zero, Holmes claims. The Luna Foundation Guard, or LFG, a Terra USD supporting foundation, purchased billions of dollars in Bitcoin, BTC, reserves to back UST. LFG eventually sold some Bitcoin holdings and purchased UST to drive up its price. USD was conceived as a decentralized finance solution to maintain its one-to-one peg to the US dollar, but the experiment failed. Nothing is invincible, no matter how much technology or human capital a protocol has, Holmes says. Projects will and can fail. The impact of the USD crash on the crypto market. USD was one of the world's largest stablecoins and was widely used for decentralized finance on the Terra network. The Anchor lending and borrowing protocol, which allows users to purchase USD, offers up to 18% annual percentage yield, making it one of the highest yielding offerings in the crypto market. The majority of Anchor's deposits were made in USD. Anchor recently proposed cutting USD yield rates to an average of 4% due to the extreme volatility caused by the depegging of USD to $1. Meanwhile, the Terra blockchain has halted operations in order to devise a rebuilding strategy. Several cryptocurrency exchanges have even suspended trading in Luna and its stablecoin. Bitcoin's price fell after LFG sold off its BTC reserves to prop up USD. Some crypto traders are buying Luna in the hopes that it will rise again, but many are hesitant to invest in a coin that has seen such a dramatic drop, especially if it is where they have kept a large portion of their holdings. Investors learned from the USD crash that algorithmic stablecoins face structural challenges and that Bitcoin reserves are insufficient to keep a stablecoin pegged to $1. That experiment failed, resulting in the single largest value-losing event in cryptocurrency history, Pierce says, but he adds that the failure has valuable lessons for developers. I believe that an algorithmic stablecoin that is not dependent on legacy financial infrastructure will play a role in the future, he says. Stablecoins in the future. Investors may be wondering how successful stablecoins will be in their role of providing liquidity to the crypto market in light of the USD debacle. The USD crash has caused investors to question their trust in the stablecoin structure, as well as what they believe stablecoins are and should be, according to fintech expert Chris Skinner, author of books including Doing Digital: Lessons from Leaders. He claims that the operation of other stablecoins will also be called into question. Skinner claims that some crypto market participants place their trust in these structures without looking under the hood. Investors should conduct due diligence and ensure they understand the risks and exposure involved, he adds. According to experts, the USD crash could actually help other stablecoins, such as USDC and USDT, grow. It will allow other stablecoins to enter the picture, possibly some new algorithmic experiments, says Adil Abdullali, head of portfolio management at digital asset management firm Securitize Capital. According to Abdullali, stablecoin competition is a case of survival of the fittest, with projects that survive growing stronger. It's an adversarial space with new innovations all the time, he says. The market moves quickly, and projects that don't work are quickly abandoned. When the community loses confidence and there's a run on the currency, if everyone withdraws their money, it effectively pulls the rug out from under the marketplace, and that's effectively what's been happening with Terra, Luna, Skinner says. Investors should treat stablecoins as they would any other investment. Skinner advises them to be aware of what they are getting themselves into. Do you have faith that it will not result in a loss of your investment? Even if you are confident that you will not lose your investment, be prepared to lose whatever money you put in.